Hi everyone, thanks for coming back and joining us for the afternoon session. We've obviously had a busy morning of planning and sharing ideas and so on. So this afternoon sessions, we have some guest presenters. And first up, we're lucky to have, well, I'll flick over to my next slide. We have Vanessa Graydon from EC Credit Control. Just a very quick intro to Vanessa, and then I'll hand over to her. Vanessa is the Regional Manager for EC Credit Control and a veteran of the credit management industry, based in Western Sydney, mainly looking after businesses and clients in the Western Sydney region. She'll be doing a short presentation with plenty of practical tips on improving your credit management processes, reducing your exposure and risk in these challenging times, and how to improve your chances of collecting outstanding invoices from problem customers. And I thought it was a particularly worthwhile topic considering the cash crunch that people are experiencing. I know a lot of my clients have customers who are holding off on paying or paying more slowly. So Vanessa, I'll hand over to you.
Thanks, Anil. Okay, well, thanks everybody for having me on today. Although I've done many a presentation in my time, I have to admit this is the first time via this sort of platform, so bear with me, a bit new to me. But as Anil touched on, what I sort of wanted to talk to people about today is we're in unique times at the moment, obviously enough, and they're going to continue to be unique and unprecedented in the next 6 to 12 months specifically. There's no stats and no figures that I can give you on this because it is totally unknown at this point in time. But the thing that is known, without having figures associated with it, is that many businesses will not survive the next 6 to 12 months. It's as simple as that. And many of those businesses will be your clients. That's also a given. So the best thing to do now is to make sure that your business, your livelihood and your cash flow is protected. And one of the key ways to do that is to have a very proper, very concise collection methodology in place with your clients and your outstanding debtors. The first part to that is making sure that any initial contracts, terms of trade, terms and conditions, however you want to phrase it, are actually fairly rock solid and signed and created at the beginning of your business relationship. They don't always have to be done at the beginning, but it's best if they are. You can always rectify that going forward. And then the other side of thing is keeping your cash flow coming. Long gone are the days of a handshake and a she'll be right, mate, everything will be good. No, it won't be good. What you really need to be doing now with your outstanding accounts, whether they're 7-day accounts, 30-day accounts, 30 days from the end of month, whatever it may be, is you need to be proactive with collecting those debts. Don't just say, oh, look, that client's been a great client for the last 5 or 10 years. Yeah, they pay slow, but they'll always eventually pay. Well, in these times, you don't know what financial pressures they're going through, which will then impact on you. So don't think it'll be okay. When an invoice becomes due, follow that up straight away. Yeah, initially follow up quite friendly. If it's 7 days or 14 days past due, follow up with you may have overlooked this. If you have, when can we expect payment? If you have already paid, please disregard this email or letter or whatever you've sent. But follow up straight away. Don't leave it to be 30 days past due. Do it at 7 or 14. Then when you don't have a payment or any contact back from your debtor or your client, follow that up again, either with a phone call, but if you do make a phone call, then follow that up with an email. Everything needs to be in writing. So say, for example, you have a phone conversation with your client, there's an outstanding debt of $20,000. And they say, look, Anil, I do apologise about that. We're going through some financial hardship at the moment. Can I pay $10,000 on this date and then the remainder on this date? Make sure you then follow that phone conversation up in an email outlining what was discussed, dates, anything of relevance, because you need to have this documented. You can't use a phone call when you're chasing a debt as proof of contact or proof of promise. The other thing that you can do is if you are having, I hate saying the COVID-19 issue. But if you are having clients that say they're having COVID-19 issues with their cash flow and they literally don't have it, get them to acknowledge the debt in writing and go on a payment schedule. In fact, I actually have a form that I can give anybody who wants it, no cost, just a bit of a service. It's a debt acknowledgement form with a payment schedule for a payment plan. Because if somebody's got a debt owing you for, say, $20,000, I use that figure again, and they can't pay it, if you can still get them on a regular payment schedule where they're whittling the debt down, that's better for you and your cash flow, and it's certainly better for them. The other side of things is if you can't recover the debt, you can't get them on a payment plan, there's no money coming in, don't leave a debt go further than 90 days before you refer that debt to a third-party agency. Doesn't have to be EC Credit Control, it can be whoever you use. But a debt that goes past 90 days, the percentage chance of recovery or recovery in full diminishes as the debt gets older. So the sooner that you pass that debt on for recovery, the more likely chance of success with getting the final amount in.
So
now, you may think, sorry?
Yeah, just quickly on that, don't wait till it's after 90 days, but roughly when do you, should it be at the 60-day overdue mark? What are your...
It depends on what your credit terms are. If your credit terms are 7 days from date of invoice, no, don't let it go to 90 days. Do it at 45. If your credit terms are 30 days or 30 days, 75 days, I would be referring it. If your terms are 30 days from end of month, I'd be referring it at 90 days. So again, it depends what your credit terms are with your client as to what point in time you refer it. Now, you may think to yourself, well, if I can't collect it, why will a debt recovery agency be able to collect it when I can't? Well, there's a couple of reasons there. Mercantile agencies, whoever they may be, all have a bit of a big stick, for want of a better term, that the business holders or business owners don't have. And that is consequence of non-payment of this debt. First consequence, if your terms are in order, is that additional costs can and will be added to that debt. Now, those costs can include cost of recovery, administrative fees, and also interest. The other thing that we can do that you can't do, and again, another consequence, is that we have the ability to default list their credit file. Now, default listing a credit file is a pretty big stick. You can't get a mobile phone if you have a default listing on your credit file. So that's a consequence of debt not being paid, and so that's a power that a mercantile agency has. The other side of that is that that's what we specialize in. We're professional at getting money out of people. Our business is not about landscaping. Our business is not about training people. Our business is not about bricklaying. Our business is about debt recovery. So that's what we specialize in, and that's why we're the specialists in it. The other thing is, I sort of touched on this before, but accounts that get paid first and preferential over other outstanding accounts will always be the accounts that are in the forefront of people's minds. By that, I mean the creditors that have the most regular contact with their debtors will be in the forefront of the debtors or your client's mind. So you will always get paid first. So don't be shy or afraid to follow up or think, oh, I don't want to annoy them. I don't want to harass them. Well, quite frankly, a sale's not a sale till you've been paid, and it's your money, and you have every right to be following it up. Now, this leads me sort of to, I guess, the next part of what I wanted to mention. Debt recovery only works if the business is still trading. So you may think, okay, our client's gone into liquidation. Now, that's not going to happen over the next 6 months through a forced liquidation, but companies can still go into voluntary liquidation. So companies who can't see their way out of what we're going through at the moment can put themselves voluntary into liquidation. It just cannot be forced by a third party. Now, once a company's gone into liquidation, unless you are a secured creditor, you have little to Buckley's chance of getting any money out of that liquidated company. Having said that, though, there is a way to become a secured creditor. Now, I hope I'm not preaching to the converted already. I don't know how many of you know about the Personal Properties Securities Act of 2012.
I think a lot of people wouldn't know about it. Some would, some
Yep.
in certain industries, but I think it's definitely worth covering, Vanessa.
Yep, okay. The government brought in the Act in 2012 basically to protect small and medium businesses from the domino effect from having their clients go into liquidation. What it basically means is that for a very small fee, you can lodge yourself as a secured creditor over your client's account on the registry. It's a government registry. It's used by all banks and finance companies and any commercial business that knows about it, and you'd be amazed how many don't. As a secured creditor, it actually does two things. First of all, it puts you at the table with all the other secured creditors. So no guarantee you'll get 100 cents out of the dollar for any debt owed at time of liquidation, but you will get something back. Whereas as an unsecured creditor, the chances are very, very slim. And the amount would be very, very low. The other thing it does is a secured creditor is protected from what's called the preferential payment clawback. Now, what that is a liquidator comes into a company, and the first thing he does is liquidates any assets. Now, they can be physical assets, they can be the ledger of outstanding accounts, and then they can be what they call preferential payments. Now, preferential payment is any payment made in the prior 6 months to the liquidator being appointed. Now, that's a payment to the liquidated company's suppliers. Now, any payment made during those 6 months can be deemed by the liquidator with very little supporting documentation that it was a preferential payment. It can be something as simple as an overdue invoice email follow-up. The liquidator can deem, well, you realise this company was in financial distress because you're following up on a non-payment. And he can come and knock on your door and say, Anil, ABC Proprietary Limited paid you $20,000 6 weeks ago. We deem that a preferential payment. You need to pay that back into the kitty. And by law, you have to. It seems like a tough law, but it's true. It is law. Then what the liquidator does is after he's assembled all the assets, he pays out any staff entitlements that may be still non-paid. The next thing he does, and you'll love this, he pays himself. Gotta love a liquidator, and they pay themselves well too. Then the next thing he does is he pays out secured creditors. And then I've seen many a liquidator list, and you may have, say, 15 pages of creditors on that list. And I shit you not, there's usually only between 5 and 10 that are secured, and hundreds that are secured, and hundreds that are unsecured. So it's a very cheap and easy method of protecting your business from one of your clients going into liquidation. And it can be through no fault of their own. It could be because their clients have gone into liquidation. And this is the thing. You do not know what's happening with your clients from their end. You may have had a great relationship with somebody for 10 years, but you don't know how they're struggling financially, getting payments in from their clients. You just don't know. And nobody knows. But particularly now, it's going to become harder.
And the PPSR is, this register is obviously only for business to business.
That's correct.
Customers, yeah. That's
correct. There is also another side of the PPSA as well. And I don't know how many people on here now are they've got equipment, say, for example, scaffolding on site, cranes on site. things like that. You can also have a different collateral class of a registration, which basically means you can put a registration over a piece of equipment your business owns that's identifiable. Now, it can be a serial number, it can be a business name stamp on a scaffold, for example. But if you have a registration over an identifiable piece of equipment that your company owns, one of the other tricky things a liquidator does is, say, for example, I use a building site. If you've got equipment that you own on hire on a building site and the head contractor goes belly up, the liquidator will actually lock up that building site, locking up any equipment that is on that site, whether it's yours or not. If you don't have a registration over your identifiable piece of equipment, that liquidator can hold that item for as long as he chooses. It can be months, it can be over 12 months. So during that time, not only are you losing your hire money on that item for the job that it was on, you can't rehire it out because it's stuck, it's locked up, you can't access it. But if you have a registration over your goods, over your equipment, the liquidator has to release it immediately on proof of registration. So that's another tool with the PPSA as well. I'm not sure because I don't know the demographics of who's on here, so I'm not sure if that's relevant to anybody.
It might be relevant to some. Yeah, I think it might be relevant to some. I think most are probably service providers. There's not a lot of equipment. I'm just looking at the list. There's probably not a lot of people who have equipment or sell equipment.
Yep.
But yeah, no, definitely worthwhile. So the three things you've covered off there, Vanessa, three key areas. One is the debt collection process. Really be on top of that, following up, be front of mind. Don't be afraid to refer it to a credit management company.
Yep.
Victor.
The other thing as well, Anil, and I forgot to add this before, and I see it happen a lot. If you were going to make the threat sounds a bit harsh, but if you were going to send an overdue reminder as a final demand, and if this demand's not paid within 7 days, we will have no choice but to refer this to a third-party agency. Follow through. Never make a threat that you're not going to follow through with, because people talk, and you will have clients that know each other and talk to each other. You don't want them saying, oh, look, they're a soft touch, they threatened, they never did it. Never threaten something and don't follow through. Another key point. Sorry, Neil, go on.
No, it's good. It's good. So there's obviously the credit collection process, the terms and conditions need to be right, so you can actually make it easier to collect. So I'm sure there are a lot of people here who haven't reviewed their terms and conditions and probably do need to. And lastly, the PPSR or PPSA, being aware of that and how to register yourself as a secured creditor.
Absolutely.
Now I know that I've got to keep these presentations short. Sorry, Vanessa. But in terms of any questions, I'd love to invite any questions that people have around this whole area of credit management and cash collection. So just looking at.
I saw something pop up, but it went before I could read it. Somebody asked a question about if you've installed goods.
Yes, Michael. Michael, do you want to unmute yourself and maybe ask about that?
Yeah, so I'm an electrician, and if I'm on a property and the owner or the head contractor goes into liquidation or just doesn't pay the bill, and I've already installed the power points and the lights that I've purchased, where's the comeback there for me to be able to retrieve that equipment?
Look, that's a tricky one because of the nature of your product. In that case, I would be putting a PPSA over the credit account, not over the items installed, because they won't be identifiable. They won't be unique.
Yeah, right.
That's the problem with that sort of equipment.
Sure.
Sorry, Michael, but yeah, you'd be better off putting it over the credit account. And with builders at the moment, I wouldn't trust a builder at all.
Yeah,
there was another question about, do you need permission? I wasn't sure who that was.
That's from Janelle.
Hi, Janelle. Yes and no. If you have a PPSA clause in any document that you supply your client with that they sign off on, be it a credit app or anything like that, and you have the appropriate Personal Property Securities Act clause in there, as well as a privacy clause, you do not need to tell them. If you do not have that type of documentation in place, you have to get written approval in writing.
Right.
That's why it's very important to have correct terms.
Yeah, I wasn't aware of that one actually. I thought that you had to inform them, but you're saying that you can actually, if you've got it in the T's and C's. So it's so important, because I know the T's and C's, it's important to have things like being able to add collection charges to the debt value and so on. But
Absolutely.
I wasn't aware of the PPSA and privacy clause, so that's very important. Okay.
Absolutely.
Right. Excellent. Now we have another question here. Yes, I mean, Nicole's just made a comment there that she's seen that just letting people know that you will it'll automatically go to a third party if they don't pay up, automatically scares them enough to pay. But as you said, if it doesn't, then you really need to follow through.
Yeah, we actually supply our clients with a pro forma final demand letter. It actually has our name on it as well, so it makes it more real. And the amount of times that a non-paying debtor will pay just off that letter alone prior to referring is astronomical. At least 40%. So it's a powerful tool.
Okay. All right, I think we probably need to wrap it up there. But Vanessa, thank you very much. Now, I will be sharing Vanessa's details and also Nicole's and Sam's details after the event, along with these recordings as well. So thank you very much, Vanessa. And I'm sure if anyone has a question, you'd be happy to help out.
Absolutely.
All right, excellent. So I'm just going to stop that